start with your thoughts on how things have evolved for the banking sector in terms of bank earnings. You know, we've seen the intervention over the last 1 year. There's been a lot of pressure on earnings. We've seen a slowdown in loans growth. So give us a sense of where are banks making money right now in terms of interest and non-interest earnings.
Okay, I think in terms of the intervention, you know, because the guidelines or the disbursement really just came out about July, August, thereabouts. So we can't really say that has really impacted bank earnings so far this year from the results we've seen. Okay, but then still, I think we might want to break...
That's the intervention into special funding for
special funding.
Several sectors.
And if you break down the first half of the year into two, okay, the first half of the year, earnings was kind of slow. Why? Because many of the banks were still focusing on getting out good FY09 audit numbers. Okay, I can imagine when you've just been faced with a special audit, okay, and now to produce full audited figures, the kind of challenges you'll be facing. Okay, so the first 3 months, that's really the challenge the banks were facing. But the next half of the year, we saw them focus more on balance sheet restructuring, okay, interest expense, managing their cost of funds. Okay, but I think now let's look at it this way. For the cleared banks, okay, their mix, interest and non-interest, is like 70-30. But if you look at the troubled banks, it's more like 85-15. Okay, why? For the troubled banks, it's skewed more towards funded income. Why? Because in the aftermath of the crisis, they had to do a lot of interest rate waivers, fee and commission waivers as well, just to get some of their clients to pay. Okay, so what we've seen is interest income is holding more steady than non-interest. Okay, so that's really the way they structure it.
Okay, give us a sense of the model, how it has impacted on the banking model. We know universal banking was introduced about 10 years ago, and over time we've seen, obviously in March this year we heard that the CBN wants to get rid of that policy and have banks that want to continue universal banking set up holding companies. Let's look at the investment banking side of things. How has the slide in the capital market and the general lull in the capital market impacted on banks that are involved in investment banking?
I think for investment banking subsidiaries of banks, okay, and even investment banking business as a whole, I think business has kind of slowed down, okay, across board for reasons which you rightly mentioned. Okay, so definitely income from investment banking subsidiaries has definitely come down, but then still, I think a couple of those banks that are still pushing their investment banking subsidiaries are actually doing pretty well. For someone like First Bank, FBN Capital is contributing quite significantly to their non-funded income.
But how come? Is it due to focus on the fixed income side now? Because obviously
fixed income,
it's not equities.
Income, they do some bonds, some bond transactions for some states. Okay, then the one do refinancing deal which occurred by Osa State Bond. A couple of transactions like that.
Pretty much fixed income related.
MTN, a couple of deals which you've been able to do. So for First Bank, and I think they actually have one of the strongest, investment banking subsidiary now amongst all the banks.
Okay, now let's look at how the winning model, if I can use that word. How do you think those that will succeed going forward? We've gone through a very troubled and very trying 1 year, but those that are going to win going forward now, what will you say is like the winning strategy?
I think I'm more retail. I think a retail focus will pay you better in the near to medium term. Okay, why do I say that? Retail market is still largely under-penetrated. Okay, so I think if I'm to look at who will win going forward in the corporate space, my top picks will be GTB and Zenith. Okay, in the retail space, it will be Diamond and IBTC, because for those two, they've actually put out the structure they need to build up traction in that market space. Infrastructure, my top picks will be First Bank, UBA. I would like to put Skybank in that space as well. Okay,
and finally, let's just look at how the intervention which we've seen, like we mentioned earlier, the central bank contributing billions of naira to push specific sectors that obviously need it at this time and are critical to the economy. How are banks likely to gain from that? Because obviously, they are not lending out customer deposits. They're actually getting special funds from the central bank, and they will obviously make a spread.
I think first thing you should know is depending on how much you get from the intervention funds, because anyone can get any amount. Okay, but the tier 2 banks for the 130 billion that we know has been disbursed already under the SME manufacturing, they benefited more. About 34% of that amount went to 3 tier 2 banks. About Sky, that's Sky, Diamond, and Access. They benefited more. Okay, when you now look at the fact that
and in terms of margins, how much would they make?
Yeah, 6%.
6%.
You know, and some of these loans are non-performing.
But how does that compare to their net interest margin on average?
Yeah, what you should notice is that prior to now, these loans are non-performing for the most part. Okay, now you restructure them and you're at least getting 6%. You should be happy. So going forward, definitely that's a positive. You know, because some of these guys might not even have been able to pay, but now you can get 6% from them because the CBN has intervened.
Okay.
You know, so that's a key positive from the CBN intervention.